Let's talk real estate taxes. My name is Amber Lewis and I'm a Tampa Bay realtor. All right, so real estate taxes. When you are a buyer and you are looking at homes that you're interested in purchasing, do not look at what the seller is paying in real estate taxes. They're based off of purchase price and assessed value, and the seller could be getting a variety of different discounts, like a homestead discount, as well as many others. So do not consider what the seller is paying in taxes when you are looking at homes to purchase. There are a few ways that your taxes can be determined. First off, on every county through the tax appraiser, they typically have a tax calculator. So you can actually plug in the address of the home that you're interested in, and it will give you a range of where your taxes might land depending on purchase price, whether or not you are going to homestead that house or not, and if there's any other discounts that you might qualify for. So when I'm out showing homes to buyers, we can either pull up that county tax calculator, or here's an easy way of doing the math that I usually use, which kind of puts me right in the middle of that tax estimate. So in general, if you're purchasing a home, let's say that purchase price is $500,000. You're taking about 80% of that purchase price to figure out the assessed value of the home. $500,000 home, you take 80% of that, you're at $400,000 for an estimated assessed value. From there, which each county has slightly different millage rates, but overall, I'm going to then take that number of $400,000, the assessed value approximately, and multiply it by 2%. So in this case, I come up with $8,000 as an annual real estate tax. Generally, when I do math this way, taking 80% of purchase price times 2%, I land somewhere in that range of the tax calculator, which are online on the different county appraiser websites. So that's just a basic thing to know, keep in mind when you're looking at homes for your taxes. Now, once you've purchased a home, and if it is your primary residence that you will be living in, then you want to apply online through your county appraiser's website for the homestead exemption. So being that it's your primary residence, the homestead exemption gives you a discount on your taxes, as well as creates a cap of a maximum of 3% increase maximum per year for as long as that home is your homestead. Another thing, my family, we moved. We had a home in Tampa. We moved just up the street, and we had homestead on our previous home for the years that we're in that home. You are able to transfer your homestead exemption from one property to another through something called portability. So when you're applying for homestead on your new property, if you've moved from another property in the same county, you can actually use portability from your previous residence to your new one to save you taxes, or take that homestead savings that you had accrued at the previous home and port it to your new home. So it's a huge savings potentially, depending on how long you've been in the previous home. The other thing to keep in mind, especially if you're purchasing a new construction home, is at the closing, they will prorate your taxes for the remainder of the year. So you will be paying, starting on that closing date through the remainder of the year, a prorated tax amount. If you're purchasing a home that maybe it was tore down and you purchased new construction, or maybe you're just buying new construction from a builder, the taxes from that current year and from the previous year are on the assessed value of the land, or the assessed value of the home before it was torn down and your home was built. So keep that in mind, do the calculations, knowing that next year, when those taxes come through, they could be very, very different than the prorated amount that you are paying at closing. And again, if it's someone who's been in the home a long time, the seller, and at closing, you are paying the prorated amount for the remainder of the year of what they are paying, which will be different than what your taxes are assessed at for the following year. So those are some things about taxes, real estate taxes in purchasing, but just that's the biggest thing, is just do not even care or look at what the seller's paying because you don't know what types of discounts they are getting. And if they've been in the home a long time and purchased it at a much lower price point, then that's going to affect what they're paying in taxes. So just worry about your price point and do your calculations to help determine what you will be paying in real estate taxes once you're moved in.